Good morning, good morning. It is Wednesday, October 12th, 7:24 a.m. here for the New York session trade ideas video here. Starting with the economic calendar, we're going to go through the events that happened overnight. As we can see, GBP had some data, and we're going to look at the upcoming economic data in this New York session. We're going to go over the US dollar through the DXY analysis, equity sentiment, and finally going over trade ideas for the session on gold and GBP USD. Now, looking at the economic calendar here, again, we had some data come out for GBP overnight, and as you can see, GDP, we had a unexpected drop month over month of 0.3%. They were forecasting a flat month, and previous was 0.2. So this is a significant drop here. So we had GDP year over year of 2.0 instead of 2.4, which is a pretty significant drop, over half the GDP growth. So this is very significant in terms of looking at the overall recession in UK hitting hard here, and we have some more industrial production, manufacturing production, and monthly GDP change, all coming in less than forecast and less than previous. So everything is pointing towards recession in the GBP. So it'll be interesting to see, how this develops in the charts and on GBP weakness or strength, or how are they going to, how are investors going to respond to this sort of data coming through. I know we had a lot of Bank of England headlines overnight mentioning that they are going to end their gilt purchases, but they are willing to continue if the economy needs. So the Bank of England has openly stated that they are willing to support the economy through this unique time. So that is controlling the price of GBP for the time being, knowing that the Bank of England's there to support the government and the economy there. So that's what happened overnight. Had some industrial production in the euro. Actually came out better than expected. Coming up, the big data for today is going to be the PPI and core PPI data for the U.S. Now, this is the Producer Purchasing Index. So this is basically the inflation measure for manufacturers, and it's going to be the reading for September. So they are actually forecasting a slight decrease from previous. So we're going to see if this has any effect in the markets here. So Monday and Tuesday were light days for data, but now we're finally getting some important data for the US. So if we get PPI data that is much lower than the forecast, much lower than the previous, well, this shows that the inflation is actually dropping, which is positive for the economy, because it means the Fed raising interest rates, they are starting to get some progress towards inflation. So this could be short-term optimism if the inflation is below. Now, the opposite is true. If the inflation ends up being much higher than forecast, then this is very negative for the economy, because the Fed's going to have to be even more aggressive, saying that it has not yet had any progress. Actually, inflation is getting worse and worse. So this is going to be very, very negative for the economy. But before getting too far into the conclusions of the PPI, there is tomorrow, Thursday, CPI, which is very important as well, which is the Consumer Price Index. So this is more on the consumer side. PPI, again, through the manufacturing and industrial side. So any outcome from today's news can be short-lived, as there is a lot more data to be digested by the markets. And even later today at 2 p.m. we have the FOMC meeting minutes. So investors are going to be looking for any sign of pivot, any sign of any side of guidance towards the monetary policy. And I'm expecting them to be just as hawkish, because they have every single member speaking so far has reiterated their determination to bring inflation down at all costs, is that they're ready to see some pain. They're ready to see the in order to get inflation down, they're ready to see unemployment rate go up. They're ready to see housing markets go down. They're ready to see a recession. Basically, they need a recession in order to bring down inflation rates. So I'm expecting to see more hawkish tone in the FOMC, which may end up, which is later on in the session, but may end up getting a nice little, might get better market sentiment and cleaner market moves for tomorrow's CPI once we get a little bit more data to digest. Because if we look right now on the DXY and the US dollar, again, we are just moving sideways here, right? So we have not done anything since the start of the week. I've been every market update and every trade idea is in the same zone here. So my analysis stays the same. Right now I have low expectation of volume of volatility until we get a cleaner sentiment from the economic data. But at this point, it does look from this bearish pullback structure, we did create a retest of about the 110 area, and we're flipping out of that pullback structure and creating some bullish higher highs, breaking past previous highs. And as long as we maintain above this level, I could see the continuation of the buys here and continuation of the US dollar bulls as the Federal Reserve hawkish monetary policy is holding the most weight across all asset classes. So even if the US dollar comes back down to this zone, still very bullish. It could even come down a little bit further to the downside around 111.7 key level and still have the bounce as we continue with this overall trend here. So if we don't break within the session, within the PPI data, and have a continuation in this session or in coming sessions, we may end up getting either this retest or this retest down here. So it's still maintaining the integrity of the bullish structure here. If I'm looking at now the equity markets, we are still flat. Nothing new to report here. VIX is still near the highs, just consolidating for the time being. Equity markets effectively wiped out that entire bullish rally, are back at the lows, but we're just flat right now between this weekly key level and this daily demand level right here. So if we don't break below, we may end up getting a further pullback to retest these levels before getting the sell-off, or if we break below, well, we're just going to continue below this key level here. But as long as we stay within this range, this shows me that the investors are just sitting on the sideline, that everything is priced in for the time being. They're waiting for new economic data, new information to digest in order to position themselves for the next sessions and the next weeks to come. Right, so it's a lot of indecision in the markets here. Again, I'm not liking the market conditions for trading so far. I would like to see more movement of the US dollar breaking out of this range here. I'd like to see the US dollar break out of this range here. I'd like to see US 500 do the same, break out of this range here, and that would show better signs of volatility and volume in the market in order to take better trades. So this transfers over, the same indecision is visible on our gold and GU charts here. So in terms of trade ideas, I'm going to be very cautious. Again, I'm going to be waiting for a little bit clearer signs of volume and volatility, but I'm going to break down the charts nonetheless here. So let's just strip the charts down on gold, starting on the daily time frame, we do see that we are still maintaining the integrity of this bearish structure, creating these lower highs and lower lows consecutively since the beginning of the year, basically, right? Since these highs printed, creating a series of lower lows and lower highs. And now this most recent low in the 1620 region created this most recent pullback into the 720s, but we conveniently came to retest these previous lows in this previous sell side liquidity zone around 1720, 1730, and the sellers stepped in and starting to fade out this move. And now at this point, we are back below previous lows, and previous lower high levels. The significant level around 1680, 1690. We're back below this level. So if we maintain below this level, this is still extremely bearish on the higher time frames, and we may end up getting the continuation to these lows and even break lower towards the 1580s and 1600s as next higher time frame targets. So the daily and the higher time frames are still extremely bearish. Now, breaking down the 4-hour time frame, from these lows that we identified, we created this pullback, creating highs, higher lows, and new higher highs. But we came to retest these previous this level of sell side liquidity that brought us into these lows, and we failed to break, creating this double top, and started shifting into some bearish market structure. But we came into a important level of liquidity here, as we see previous buy side liquidity was formed prior to this move up, and we're coming to stall out at that level right now. So as long as we stay above this level, we may end up getting some deeper pullbacks to retest this level here, or we just range until we get more fundamental catalysts to break below this level, and then we get the continuation. So based on the 4-hour structure, we are clearly indecisive, low volume, no direction, just going sideways. So if I zoom in even more, get my key levels out here. So my trade ideas are going to stay the same as before, because we still have not moved since yesterday or the beginning of the week, basically. So my trade ideas are as follows, right? So I'm looking for a pullback to this weekly breakup structure to take sells, or a deeper pullback towards my daily breakup structure key levels here for sells as well. Or if we break below, I'm looking for a confirmation of continuation with a new intraday candle closure below 1659.7, and then going to take the retest to fill the range back to these lows and potentially continue lower to these weekly lows, 1618. So looking for sells here, but not within the middle of the range here. I'm going to look for the pullback or the break below this 4-hour demand key level. GU is quite similar. Zoom out to the daily as well. Let's wait for this to load here. All right, so the daily is even in a stronger bearish trend, as we consecutively created these lower lows and lower highs, and then this most recent lower high that pushed into aggressive new lows around the 104 region had the pullback, but the pullback only came to retest previous lows around 1.14, and we've seen weakness and rejection from these levels here. So even though we have this daily candle so far is bullish, we are maintaining the integrity of this bearish trend here, staying below previous daily sell side liquidity zones. So the higher time frames on GU are extremely bearish as well. Breaking down the 4-hour time frame, we are maintaining also some bearish structure from these pullbacks. This pullback structure created some higher lows and higher highs, retested previous levels of sell side liquidity that we identified on the higher time frames, and then got some weakness as we had this low. And then buyers did not fail to break this high, actually created a lower high here and consecutive lower lows. And even in yesterday's session here, we rejected these previous lows that brought us into these highs here. We rejected that level, but quickly got faded out as we printed new lower lows again. So we did print these new lower lows. However, right now we've got a pretty strong pullback here, and we're back within this range. We're back within this range. This is looking pretty indecisive, in my opinion, and it makes sense as investors again are on the sidelines waiting for more fundamental information to price in. Now on the 1 hour time frame, let's throw in our key levels here. Again, we're looking for potential continuations below this zone here, but overnight in London session, we actually broke back within this range. So in terms of the trade ideas, I'm going to be very cautious, and I'm not going to touch GU within this range. I'm going to wait for a pullback to double top in this area to take the sells, or I'm going to look for a new intraday closure to essentially reverse this lower time frame structure. We're going to need to see a reversal here. Once you get that new lower low close, then retest this zone again to take the sells here. So I'm not looking to sell anytime here within this range, again near the highs, or a reversal, retest, and sell off. So those are my trade ideas and my analysis here. So far the market conditions are not optimal as we're waiting for new data, new economic information to digest here. So I'm going to be very cautious here on both gold and GU. It's probably even best to wait for potentially tomorrow after the FOMC minutes come in, and that we could see some cleaner structure and some clean trending conditions here, as so far the low volume and volatility are just wrecking accounts here as we have a breakout, break back in. Gold is just jumped up, jumped back down. There's no real, and just closing in the same range here on both gold and GU. So that's it for the trade ideas for today.